What's up, guys? So I wanted to tell you the reason why I haven't been uploading videos is because I'm in school and I don't really have a lot of time. So that's my reason, but I don't really like quitting on stuff, so I'm going to keep on trying to get some videos in throughout this school year, but it's just going to be a little bit less and it's not going to be as consistent. So thank you guys for watching anyway. Alright. So the concept that I wanted to talk to you today was bear markets. And one thing that I started noticing is a lot of people that I know, they started pulling their money out of their stock portfolio, liquidating all their stock, meaning like selling all of it, and then just holding it there in their account and just saying that they were going to wait like for something. I don't know, wait for New Year's or something. That's happened to me before, I'm not going to lie, and I'm going to tell you my story about it. So this was in 2018. I basically put most of my life savings into the stock market, and Trump just started that new trade war with China, and the media was covering it all, right? So one thing that I started noticing then, the media mostly reports negative stuff because that's what gets viewers' attention. And so stocks went down about 5% in total, I want to say, yeah, and I sold right at the bottom of that. And I was just scared. I was like, I'm going to lose all my money, And then I put my money into a savings account, which I got, I want to say, 1% or 2% on it a year, which wasn't really anything because if I would have just kept my money in the stock market later on that year, I would have made a lot more. But anyway, we'll continue on with the story. So after a year, I started noticing that the stocks that I sold, they were already a little higher than the price than the previous high. So basically meaning that if the stock was at 100 and then it dropped down to 80 and I sold it, right? The stock was now at 110 and I was like, shit. And I felt really bad, you know? It didn't feel good at all because I was like, damn, I basically just wasted a year. But, the school of hard knocks, you live and you learn. So another concept that I wanted to share with you guys is, so let's say you want to buy a pair of shoes, right? And the pair of shoes costs $100. Now, let's say you don't want to buy it for that $100. But let's say that pair of shoes goes on sale for $80, right? And now you're thinking about buying it and you're like, you know what, I might as well just go buy it. And you do. So you save the $20. Now, scenario number 2. Let's say same thing happens. You want to buy a pair of shoes, costs $100, but you find it on sale for $80. Now, let's say that you don't buy it because you're like, oh, it might go on sale for $60 next, or it might just go back to up to 100. One thing about the market that I've learned, you can't really time it. And if you can, good for you, but I'm gonna say this phrase. I don't know of anybody who can time the market. And I don't know anybody that knows anybody that can time the market, But yeah. Alright, so in case you guys didn't pick up what I was basically saying is, so if the overall S&P 500 goes down, let's say 5% or something, I wouldn't recommend selling all of your portfolio. Depending what you have, if you don't really have any faith in it, go for it, sell it. But if you have faith in the stocks that you picked, I wouldn't recommend selling it because nobody could really time the market and I feel like you're just going to get hurt. You could just ride it out. And truth be told, whenever stocks go down, that's the time you should buy. Because another concept that I want you guys to understand is this. Let's say if you buy a stock, right? and you buy it at $100. Now let's say the stock goes to $80. You still own the same amount of stock. You still own the same amount of company. Nothing changed, just the price, right? So let's say if that happened, right, and you bought another stock at 80, and then they went back to 100. Now you basically got your profit of $20 from that one that you bought at 80. And this is another concept that I learned trying to get my real estate license. No. I read this in a real estate book, matter of fact. You make the majority of your money whenever you buy, not when you sell. Now I know you get the cash whenever you sell, right? But I mean, I'll explain it to you like this. Let's say you buy a house for the market value, which is $100,000, right? And now if you try to sell that house, since it's market value for like $100,000, you won't get the same amount. They'll usually try to like lowball you a little, and you'll have to wait a couple years in order for you to sell it at, let's say, 120. This is just an example. You have to wait 10 years in order to sell it at 120. Now, let's say if the same scenario, you bought the same house, but this time you told the guy that was selling it, hey, I'll buy it off of you for 70. And the guy says, you know what? I'll sell it to you for 70. So you buy it for 70,000, but the house is worth 100,000. Now, you could just go around and sell it to whoever right at that point, and you make your 30,000. It's like that. You make your money when you buy, not when you sell. But man, I think this basically wraps it up for today, because like I'm really tired and it's really late. But anyway, like, dislike, comment, don't comment. Thank you guys for watching though. Bye bye.